Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 175 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think can be useful for you in your long-term financial journey. Today, we are going to be talking about cryptocurrency and Bitcoin and blockchain and all of those big buzzwords that everybody is so interested in nowadays. So I'm really going to do a deep dive into these things that I know you guys are extremely interested in. And so I want to be able to appease you and teach you something that you are willing to learn about in these episodes. And I think it'd be really useful for you to understand exactly what cryptocurrency is, what Bitcoin and some of the other large cryptocurrencies are, what they're used for, and exactly how they are built out. And so we will learn and we will talk about all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, then be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to keep you accountable to a financial plan and create a financial plan that is specific to you and your family's needs, then I can do that. Just go to my website, www.mnowithdylan.com. Click on the Work with Dylan tab, and you can choose the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. So cryptocurrency, I'm sure all of you guys have wanted to talk about this or wanted to hear me speak on it, at least in a little more length than I have in some of the videos that I've put out, some of the episodes that I've put out, right? But let's start in this place where we just want to know, what is cryptocurrency? Right? Well, cryptocurrency, it's got the word currency in it, right? So we know that this is some type of money. It's some type of something that we can transact with. So cryptocurrency is a digital or virtual currency, and it's secured by cryptography, right? That's where we get the crypto part from, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are created on what's called the blockchain technology. And I know many of you have heard about blockchain, and we're going to get into a little more in today's episode exactly what blockchain is. So they put this out on the blockchain, right? The blockchain technology. And cryptocurrencies generally are not issued by any central governing agency or central governing bank or anything like that, right? Like the Federal Reserve has no say over cryptocurrency. Cryptocurrency is something that has been put out there, and it is on this technology, and it is what we like to call a decentralized currency, because there is no central authority that is saying, hey, put more of this currency out there, or hey, let's do this to inflate this currency or whatever, right? It is just on this particular blockchain technology that cannot be changed by individuals. It cannot be messed with, right, by some central governing authority. And so cryptocurrencies are systems that allow for secure payments online, which are denominated in virtual tokens, right? I know many of you have probably seen those Bitcoin tokens, right? They aren't actual Bitcoins. Bitcoins are obviously virtual, but you've seen those Bitcoin tokens that have the B with the lines through it as if it were a dollar sign, right? And so you pay in these virtual tokens, and a lot of places nowadays are starting to accept Bitcoin for different things. I know Tesla came out, I think last week or week before, and said we would accept Bitcoin for the purchase of a Tesla vehicle. And then there's several other businesses that have begun to accept crypto, and specifically Bitcoin. And we'll talk about Bitcoin as we move forward here as well, because who can talk about crypto without talking about Bitcoin? But there are several businesses that have begun to accept this. Now, again, this crypto part of this, right? We know it's a currency, but the crypto part refers to the various encryption system algorithms, right? And the cryptographic techniques that safeguard these entries, right? These entries of payments, these entries of purchases and selling of these particular tokens, these different cryptocurrencies. Now, cryptocurrencies, they do have differing advantages and disadvantages to them. And so I want to talk a little bit about what they are. Obviously, we're not yet talking about putting your money into cryptocurrency. We're just talking about what they are, how they work, and how they may be advantageous or in the opposite way. So some advantages of cryptocurrency. Cryptocurrencies hold the promise of making it easier to transfer funds directly between two parties because I can send you some type of crypto, you can send me some type of crypto, and there is not necessarily a middleman there. And there is no third party like a bank or credit card company that is dealing with those transactions. These transfers are secured by the use of public keys and private keys and different forms of incentive systems. And that makes it to where these are still very secure payments, yet they are on this blockchain technology and not being dealt with by different third-party companies. Now, with current cryptocurrency systems, many users have a wallet, right? There's a crypto wallet that you may have, or a certain account address, which has a public key, while private key is known only to the owner, right, and is used to sign transactions. Fund transfers are completed with minimal processing fees, allowing users to avoid the steep fees charged by banks and financial institutions for wire transfers. So Bitcoin or other cryptos are making it easier to transfer payment and doing it with definitely less friction than it was possible to do previously. Disadvantages of cryptos. The semi-anonymous nature of crypto transactions make them well suited for a host of illegal activities like money laundering or tax evasion. And even though that is the case, the ledger can be checked. So we'll talk more about the blockchain ledger here in a little while, but individuals can go in and check the ledger. Governments can go in and check the ledger. Right now, one of the largest holders of Bitcoin in the world is the United States government because they actually have gone in and they've stopped a lot of illegal activity and confiscated a lot of Bitcoin. So even though this is a potential disadvantage and an issue, it is not as big an issue as other things that may go wrong with crypto. Some cryptocurrencies are more private than others. Bitcoin, for instance, is a relatively poor choice for conducting illegal business. That's why I said the federal government has taken a lot of Bitcoin from these individuals doing illegal things, because the forensic analysis of the Bitcoin blockchain has helped authorities to arrest and prosecute criminals. More privacy-oriented coins do exist, however, such as Dash, Monero, Zcash, and they are far more difficult to trace. And so this can be a potential issue with cryptocurrency, but like you see, some of the bigger cryptocurrencies like Bitcoin, the more accepted for payment cryptocurrencies, they have more in place in order to secure the payments that are made. Now, there are some criticisms of cryptocurrency, and they are far and wide. Since the market prices for cryptocurrency are based on supply and demand, the rate at which cryptocurrency can be exchanged for another currency can fluctuate widely. And they have fluctuated widely, right? Just a year ago, cryptocurrency, specifically Bitcoin, was trading for less than 10,000 US dollars per one Bitcoin. Now we are up towards 60,000 US dollars for one Bitcoin, which is a huge surge, right? Bitcoin has experienced some rapid surges and collapses in value. It climbed as high as 19,000 per Bitcoin in December of 2017 before dropping to around 7,000 in the following months. And like I said, it has again exploded to $60,000 and nearly $60,000 per single Bitcoin. So cryptocurrencies are thus considered by some economists to be short-lived, a speculative bubble, or a fad, right? Because everybody is jumping in trying to make a quick buck. And that can be a big issue when it comes to the stability of not just a currency, right? Because currencies need to be relatively stable if we want to use them for payment and transfer. But that's not just an issue with the payments. It's an issue with people wanting to actually put their money into these different types of cryptocurrency because they don't want their money to be devalued at a fast rate. They don't want their money to be devalued very quickly because of a wide swing in price. There is a concern that cryptocurrencies like Bitcoin are not rooted in any material goods, right? Some research has identified that the cost of producing a Bitcoin, which requires an increasingly large amount of energy, is related to its market price. So again, this is a supply and demand driven asset. It is not something that has a lot of intrinsic value in and of itself. There is no asset that is backing Bitcoin. Bitcoin is simply the asset itself. It's very similar to gold and other currencies, fiat currencies in that way, right? A fiat currency is a currency that is not backed by anything. Like the US dollar used to be backed by gold, but now the US dollar is not backed by gold. So, if people are worried about the fact that cryptocurrency is not backed by anything, then why are they not worried that the dollar is not backed by anything? It's just as valuable as somebody's willingness to accept it for payment. Okay. And cryptocurrency blockchains are highly secure, but other aspects of the cryptocurrency ecosystem, including exchanges and wallets, are not immune to hacking, right? Hacking can occur. In the 10-year history of Bitcoin, several online exchanges have been subject to hacking and theft, sometimes with millions of dollars worth of coins stolen or tokens stolen. Now, this has actually shored up as time has moved forward. Obviously, when anything's really new, it's very difficult to keep the hackers out, keep the criminals out. But as things move forward, like I said earlier, Bitcoin has become far easier for the federal government to step in and take over and keep criminals from doing criminal things. Okay, so just quick, frequently asked questions about crypto. It's going to cover some of the things we've already talked about, but it will allow you to get just at least an overview of what cryptocurrency is. So in the simplest terms, cryptocurrencies are systems that allow for secure payments online, which are denominated in virtual tokens. Okay, that's in its simplest form. How do you get a cryptocurrency? Any investor can purchase cryptocurrency through crypto exchanges like Coinbase, Cash App, and other things. It's very available to purchase if you want to do so. What's the point? Well, many experts see the blockchain technology as having serious potential for uses like online voting, crowdfunding. Major institutions such as JP Morgan see the potential to lower transaction costs by streamlining payment processing. And so all this would be a big point of cryptocurrency because the underlying technology is so valuable. And then how does cryptocurrency make money? Well, cryptocurrencies allow for secure payments online, which are denominated in those virtual tokens, and they are represented by ledger entries internal to the system. Investors can make money with cryptocurrency by mining cryptocurrency like Bitcoin or simply selling their Bitcoin or other cryptocurrency at a profit. And then what are the most popular cryptocurrencies? Well, Bitcoin is the most popular, and it's followed by Ethereum, which is also very large relative to the other cryptos. And then you have things like Litecoin, Cardano, things of the like. But the dominant force in the crypto space is Bitcoin, and then Ethereum has made quite a run on its own as well. And so let's jump from just talking about crypto. Let's jump into the actual blockchain, what the blockchain is, how the blockchain works. And so everybody who's heard about the blockchain thinks it's extremely complex and difficult, and in some ways it definitely can be. But the core concept is very, very simple. A blockchain is a type of database, okay? And this type of database is a collection of information that is stored electronically on a computer system, right? Just like any other type of database. But one of the primary differences between blockchain and a typical database is the way the data is structured. A blockchain collects information together in groups known as blocks. That's why it is called the blockchain, right? So it puts the data into chunks, these blocks, and these blocks are chained together, right? A blockchain collects information into groups, puts it in blocks, and holds that set of information. Blocks have certain storage capacities, and when filled, are chained to other blocks of data, blocks of information. All new information that follows any freshly added block is compiled into a newly formed block that will then be added to the chain once it is also filled. Now, this makes it so that all blockchains are databases, but not all databases are blockchains, right? You can have a blockchain database, but that does not mean that any database that you use is going to be backed by the blockchain system. And so the transaction process is actually quite simple, right? Let's say a new transaction is entered, like you tried to go and purchase Bitcoin. Well, the transaction is then transmitted to a network of peer-to-peer computers that are scattered across the world. And that's a real attractive attribute of blockchain technology, is that the system of computers is worldwide. It's not something where you can go to one server and shut it all down. It's just not possible. Then this network of computers solves equations to confirm the validity of the transaction. And then the confirmed transaction, when it is found to be legitimate, is clustered together into blocks. Like I was just saying, they clustered the data into blocks. These blocks are then chained together, creating a long history of all transactions that are permanent. and then the transaction is complete. And so once your transaction is on that blockchain, anybody can go back in and check the ledger. They can check those different blocks and see what actually went on, and it is a long-standing history because the blocks are permanent. And then because of the decentralized nature of the blockchain, especially for something like Bitcoin, all transactions can be transparently viewed by the public. So if you use what they call a personal node or a blockchain explorer, you can see transactions occurring live. Each node has its own copy of the chain that gets updated as fresh blocks are confirmed and added. This means that if you wanted to, you could track Bitcoin wherever it goes. Now, this chain is obviously very complex. There are tons and tons of transactions, but you could track it. So for example, exchanges have been hacked in the past where those who held Bitcoin on the exchanges lost everything. While the hacker may be entirely anonymous, the Bitcoins that are extracted are easily traceable. If Bitcoins that were stolen and some of these hacks were to be moved or spent somewhere, it would absolutely be known. And so that is an attractive feature of the blockchain as well, because you know where the transactions are occurring. Now, is the blockchain secure? Well, blockchain technology accounts for the issues of security and trust in several ways. First, new blocks are always stored linearly and chronologically, right? So they're in a line and they are listed as they come in, right? That is, they always are added to the end of the blockchain, new blocks are. And if you take a look at Bitcoin's blockchain, you'll see that each block has a position on the chain called a height. And as of November 2020, the block's height has reached 656,197 blocks so far. So after a block has been added to the end of the blockchain, it's very difficult to go back and alter the contents of the block unless the majority reach a consensus to do so. So the majority of those part of the blockchain must agree to change what happened within a particular block. And this is important because let's say a hacker wants to alter the blockchain and steal Bitcoin from everyone else. If they were to alter their own single copy, it would no longer align with everyone else's copy. And when everyone else cross-references their copies against each other, they would see that this one copy stands out and that the hacker version of the chain would be cast away as illegitimate. So this can keep things more and more secure. So ultimately, to hack the system, it has to be hacked by someone who can simultaneously control 51% of the copies of the blockchain. Due to the size of Bitcoin's network and how fast it's growing, the cost to pull this off would be basically insurmountable, right? Not only would this be extremely expensive, but it would likely be fruitless. You likely wouldn't get anything out of it. Doing something like this would not go unnoticed as network members would see such drastic alterations to the blockchain. The network members would fork off to a new version of the chain that has not yet been affected. And this would cause the attacked version of Bitcoin to plummet in value, Bitcoin or other cryptos, and making the attack ultimately pointless, okay? So the security of the blockchain is amazing. And a lot of people, they want to put their money into something that is backed by blockchain, right? They think that blockchain is a technology of the future. And it's hard to argue with the security features of the blockchain technology. But that doesn't answer the question as to why does Bitcoin have value? What is Bitcoin about? What are these other cryptocurrencies about? Because yes, there are these cryptocurrencies and yes, they do transact on this blockchain technology, but why does the cryptocurrency have any value? Will the cryptocurrency have any value as we move forward? And should you be putting your money into it? And that's where we're going next. So here we go. Let's start with Bitcoin, right? Bitcoin is a digital currency that was created in January of 2009. It follows the ideas that were set out in a white paper by this pseudonym called Satoshi Nakamoto, right? And people think that this is the individual who began cryptocurrency, who began Bitcoin. Okay, the identity of this person or persons who created the technology is a mystery, and Bitcoin offers the promise of lower transaction fees than traditional online payment mechanisms. And unlike government-issued currencies, it is operated by a decentralized authority. So like we've talked about before with cryptocurrency, it's decentralized, a government doesn't run it. Okay, this is a type of cryptocurrency where there is no physical currency, right? Only balance is kept on a public ledger. And this is scary to a lot of people because they're like, well, if there's nothing physical, then what is going on? Is it just air? Is it just, something that is, a fugazi? Well, you don't quite know. And until you look into it, until you understand exactly what's going on here, you won't have as good of an idea. And obviously, if there were no demand for it at all, then obviously it would be worthless, right? Just like any other currency. If there was no demand for dollars, then the dollar would be worthless. In the same way, if there's no demand for cryptocurrency or Bitcoin, then it would also be worthless. Bitcoin is very popular and has triggered the launch of hundreds of other cryptocurrencies, collectively referred to as altcoins, right? Bitcoin is really the granddaddy of them all, and then there are all these smaller altcoins that go along behind them. Not to say that those may not have any value, but relative to Bitcoin, Bitcoin was the leader of the pack. Now, an interesting thing about Bitcoin and other cryptos, but Bitcoin specifically, is that Bitcoin is mined, right? Which means that there's a process by which Bitcoins are released into circulation. Generally, mining requires the solving of computationally difficult puzzles in order to discover a new quote-unquote block, right, that is added to the blockchain. These cryptocurrency tokens are added to the blockchain. So Bitcoin mining adds and verifies transaction records across the network. For adding blocks to the blockchain, miners are rewarded with a few Bitcoins. So these individuals who go about mining out Bitcoins, bringing the Bitcoins to the blockchain, they unlock these new blocks, and then they are also paid with a few Bitcoins. Okay, the reward is halved every 210,000 blocks. The block reward was 50 new Bitcoins in 2009. And just think about the value. Let's see, 50 new Bitcoins at this point, we're talking, $3 million approximately in today's value. And then they get halved every now and then, right? Every 210,000 blocks. So on May 11th, 2020, the third halving occurred, which brought the reward for each block discovery down to 6.25 Bitcoins. Okay, so it becomes less and less advantageous in the number of Bitcoins that you receive for mining, yet there is still this increase in price that has occurred. So 6.25 Bitcoins is still quite valuable. A variety of hardware can be used to mine Bitcoins. However, some yield higher rewards than others. Certain computer chips or more advanced processing units can achieve more rewards. These elaborate mining processors are known as mining rigs. And one Bitcoin is divisible into 8 decimal places, 100 millionths of one Bitcoin. And that smallest unit has been called a Satoshi because, like I said, the pseudonym Satoshi Nakamoto was used in the creation of Bitcoin. Okay. And so that's just a little backstory on Bitcoin. Again, it falls into that cryptocurrency heading, right? But there are also other coins, right? There are other coins like Ethereum. And Ethereum is the second in command behind Bitcoin. They are the two largest far and away. Okay. And so what Bitcoin did is it signaled the emergence of a new form of digital money that operates outside the control of the government or any corporation. Okay. But people began to realize that one of the underlying innovations of Bitcoin, the blockchain, could be utilized for other things. So Ethereum proposed to utilize blockchain technology not only for maintaining a decentralized payment network, but also for storing computer code that can be used to power tamper-proof, decentralized financial contracts and applications. So Ethereum applications and contracts are powered by Ether, which is the Ethereum cryptocurrency. Ether was intended to complement rather than compete with Bitcoin, but it has nonetheless emerged as a competitor to the other cryptocurrency exchanges. And so there is something out there like Ethereum. And each different cryptocurrency is going to have something different about them. They're going to have different things that are specific to what they are, how they look, how they act, what they back, what they do with the blockchain technology. And so they're all going to look a little different. But again, Bitcoin and Ethereum being two of the largest. And Ethereum is being heavily used now to buy what they call NFTs, the non-fungible tokens, which I'm not going to dig too far into that right now, but that's really just, the digital art scene. And it has been really heavily pushed by people like Gary Vee, who are really heavy into that space. And so Ethereum is used to purchase NFTs and other things, and it should continue to be used in the same way that Bitcoin, right? Bitcoin's used for a lot of things, so will Ethereum be. But then the ultimate question, and I saved this till the end because I want to really dig into this for just a minute, and then I will let you guys go about your time today. But Is Bitcoin or Ethereum or any other cryptocurrency worth you investing in? Well, absolutely not, because cryptocurrency is not an investment, okay? We've talked before about investments, right? And investments, they should do two things, right? A good investment operation should provide you with an adequate rate of return and preservation of capital, the promise of the preservation of capital. Well, currencies in this way, especially these very volatile, unstable currencies, are not promising you either one, right? They aren't promising you that you will get to keep the money that you put into them, and they are not allowing for an adequate rate of return in a for sure type of way, right? Because there's no way to put an intrinsic value on something like Bitcoin, even though, if you'd have bought Bitcoin a year ago, then yes, you would have made a handsome gain from then to today. But there was no way of knowing that you would actually make that handsome gain from then until today. But many people do believe there is still value in these cryptocurrencies. They believe that as we move forward, these cryptocurrencies will be used as the currency of the future. They will be the currencies that people use to transact, and it will be a worldwide system of these cryptocurrencies. Now, does that mean that you should go and put all your money into it? Absolutely not. That is not what that means, okay? But if you have, and I'm just going to kind of put a number on this, if you have at least $10,000 invested already, okay, you're in the part of the financial action plan where you should be investing for your future, and you've got over $10,000 invested into traditional investments like stocks, bonds, mutual funds, things that are going to grow over the long term, and you want to speculate, right? Because that's what it would be in a cryptocurrency. It is not investing, it is speculation, because there is no guarantee of anything, right? There is no intrinsic value to be had. You are speculating in whatever asset you are putting your money into, whatever crypto you would put your money into. If you want to speculate with less than 5% of your net worth, by all means, you can speculate with less than 5% of your net worth. Because, of course, if less than 5% of your net worth blows up into something huge, then it was extremely valuable for you to put something into it, right? So if you're as interested in it and you do believe it's going to be the currency of the future, then yeah, less than 5% of your net worth is not hurtful. But you have to remember, this is not an investment, right? This is not investing. This is speculating. This is putting your money into something and hoping, right? We aren't hoping when we're investing. We are putting money into something and we know that over time it's going to go up in value. Bitcoin, we don't know over time if it's going to go up in value. Ethereum, we don't know if over time it's going to go up in value. Okay. We do know that it's a fad right now. We do know that it's really hot, and it may stick around for the rest of our lives, and it may be something that really, really changes the world. But right now, there is no reasonable basis that you should take all of your money and put it into cryptocurrency. It is not something that is stable enough for you to do so or proven enough for you to do so. But again, if you want to speculate in smaller amounts, then by all means, go ahead. Okay. It's not something that is going to kill you if it's less than 5% of your net worth, right? And like I said, if it goes up in value, then by all means, you can cash in on the fact that you made money in the cryptocurrency market. But again, these are currencies, right? You wouldn't go out and just buy a ton of euros right now because you think the euro is going to go up in value. Most people don't do that. Most people don't transact in other currencies. The only reason that people are interested in transacting in the cryptocurrency market is because of the volatility, because of the wild shots in price upward, right? We don't see that in more stable currencies, but what's the difference? There's really no difference. These fiat currencies like the euro, like the dollar, like the yen, there's really no difference between those and these crypto versions. Even though the crypto versions are backed by this technology, they are decentralized, all these different types of things, they are still currencies. Okay, so if you're putting your money into currencies, that's just you betting that currency is going to increase in value relative to the dollar, or the dollar is going to decrease in value relative to that currency. There is nothing that is going to drive the price other than that fact, and then people actually wanting to purchase it. And so it can turn into a speculative bubble, so you should look out for that. But it is not something that we invest in. Okay, it's only something that you have the ability to speculate in if you have extra money and it's just a small amount of what you have. But you should not be thinking of this as your retirement plan. You should not be thinking of this as what I'm talking about in the financial action plan when I say invest at least 15% for your future. This is not it. Bitcoin, yes, it may be around for a long time. Yes, crypto may be around for a long time, but you need to understand what you're invested in and really be sure that whatever you're investing in is going to go up in value over the long term, not the short term. And most people who are transacting in the Bitcoin market are short-term holders. Now, are institutions buying it? Of course, right? Institutions are buying it in droves, and that can really prop up the price and keep it up. But again, it is still a currency. It is something that you can speculate in, but it is not the way that we need to invest over the long term. So I hope this helped you to better conceptualize what cryptocurrency is, what the blockchain is, what Bitcoin and Ethereum are. I'm not claiming to be an expert, and I'm also not claiming that you should just stop at what I put out in this episode. I think you can do deeper dives and understand it even better from individuals who are a lot closer to the action than I may be. But I know that this is something that was really wanted by a lot of you guys. A lot of you wanted this type of information, so I thought I'd put it out there for you, help you to understand it a little better, and hopefully answer any questions that you may have about cryptocurrency in general. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, then be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to create a plan that's specific to you and your family's needs and keep you accountable to that plan over the long term, then I can help you do that. Just go to my website, www.MNOwithDylan.com. Click on the Work with Dylan tab, and you can choose the financial coaching session type that would work best for you, and we can begin pushing towards your long-term financial goals together. So tune in Monday as I talk about financial literacy next week, because April is Financial Literacy Month, and I cover some topics that are specific to learning more about finance and financial markets. And so Monday we are going to talk about bull and bear markets, what they are, what they look like, and what they may mean to your financial future. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.